House prices in New Zealand are barely moving. The headlines say flat, Cotality calls it sluggish, the Herald says it's the longest downturn ever. But the calm national number is hiding something important, because right now, house prices in just one part of the country are up 32% since they bottomed out, while another is still down 30% from the peak. It's the same country, but there's a $350,000 difference between the winners and the losers. So I did what I always do. I pulled the latest numbers for every district in the country, ranked them, and found the 5 parts of the country where property prices are quietly booming, and the 5 that are still falling. And by the end, you'll know which side of that split your area's on and what to actually do about it. So let's find out. Which side is your house on? At level 5, house prices are going up in the far north. Property values there are up 9.3% from the bottom, still 5% below its COVID peak, but it's climbing. And house prices are up over 5% in just the last 3 months. Now, for an area of like 74,000 people, that's a pretty serious move. But why is it that the far north has far recovering house prices? That's a dumb joke, but stick with me. I put it down partly to the Auckland exodus. Stats NZ says that 135,000 Aucklanders left the region between 2018 and 2023. Most went to the Waikato, but a meaningful share ended up heading north, about 19,000 odd. And what are they looking for? Cheaper land, sea views, and remote work. On the other hand, property values are genuinely sluggish in Auckland. The Auckland region has 1.7 million people and the biggest property market in the country, yet property prices are down 23% from the peak, only just above the bottom of the market. Now, there's no single villain to blame for Auckland's downturn. Auckland's just the most expensive large city in New Zealand, which makes it the most sensitive to interest rate rises. The bigger the mortgage, the harder a rate rise bites. And I should say that for all 5 areas that are falling, I've ranked them by which ones are still dropping hardest. So for example, Auckland's total fall is bigger than some of the others on this list, but I've ranked it at number 5 because it looks like it's already found its floor. And there's a really important lesson in this, right? There's really no such thing as the New Zealand property market. There's the Auckland market and the Christchurch market and the mighty South Taranaki market, and 67 different markets all operating within New Zealand. The national average is that property prices are up 0.3% over the last 3 months, but the far north is up 5%, and Waikato district, just south of Auckland, is down 1.8% over that same period. It's a bit like the share market. So the S&P 500 can be dead flat over a year, and you've still got individual companies that might be up 60% and others that are down 40%. In the property market, some areas are starting to recover while others are still declining, and this difference largely depends on location. So it's a flat national number, but that tells you about the country. It tells you nothing about where you live and the properties that you've invested in. Now, I could only fit 10 markets into this video, but I've actually ranked all 67 and where each one sits within its cycle and whether it's rising or falling. And the full list is down in the description so you can find exactly where your area sits. At level 4 though, house prices are going up in Christchurch City and its satellite towns. Now, Christchurch has now fully recovered. So if you bought a house at the peak of the market, held on for dear life, it'd now be worth more than at the height of the 2021 property boom, assuming your property followed the market perfectly. And house prices are up 11.3% from the bottom of that market. Now, this is the first major metro city in New Zealand to start creating new record highs again. And for a region of nearly, like 500,000 people, that's significant. Christchurch is now in genuine growth territory while half the country is still basically falling. But if we look at the areas that are still dropping at level 4, going down is Palmerston North and Horowhenua. Now, Palmy North, property prices are still 18% below their peak. Next door, in Levin and Horowhenua, property prices are even worse. They're down 23% from the peak. So a $700K house at the peak, it's now worth less than $540,000, again assuming it followed the market perfectly. And while Christchurch is racking up record highs, Levin, property prices are still falling there and don't appear to have bottomed out yet. They're still figuring out where the floor is. And the reason property values are falling so hard is because they rose so fast in the boom. I mean, in the COVID boom, buyers priced out of Wellington, they headed up State Highway 1. They were chasing something more affordable, and Levin was the first cab off the rank. So prices ran up, and they ran up fast. But a lot of that was really just Wellington demand in disguise. So as Wellington itself cooled off, the buyers that were heading up north, they dried up. And the markets that ran the furthest in the boom, well, they've got the furthest to fall. But did you notice something before when I told you about actually both Christchurch and Levin? I said it's fully recovered, the market is back above its peak, and if you bought a property, its value would be hitting record highs. But there were 6 very important words that went along with that, assuming it followed the market perfectly. Now, I own a property, I own several properties in Christchurch, and I bought one at the market peak in 2022. Now, if my property had tracked the market perfectly, I'd be able to log on to homes.co.nz right now and see its value back at what it was when I bought it. But it's not. And that's because your house is not the market. If the market is the average of all properties, that means half of the properties will lag behind the market and half of the properties will speed ahead of it. On top of that, the average estimate on homes.co.nz is about 6% out, and more than 1 in 4 properties have estimates that are off by more than 10%. So even when the market goes up 10%, that doesn't mean that the value that you see on homes.co.nz goes up by 10% too. Now, a quick favour, if you're finding this useful so far, hit the like button, subscribe, and ring that notification bell. That is how I know which videos to keep doing more of. And if you do already subscribe, you might already guess that when we move to level 3, in the going up camp, we've got Queenstown Lakes. Property values there are up 16% from the bottom, and are actually up 13% above its COVID-19 fueled house price peak. So like Christchurch, Queenstown isn't just recovering, it's hitting new highs. For a market that was already one of the most expensive in the country, that's a pretty serious move. But why always Queenstown? Well, I think there are 3 forces going on. First, we've got international tourism. It has come back hard. We've got flights full, ski lifts going, the restaurants are full. And then you've got offshore buyers using the visa changes to buy more lifestyle homes. And the truth is, Queenstown doesn't really have a comparable substitute, not just in New Zealand, but of all of Australasia. There's only one Queenstown. Supply is constrained by geography and council zoning, and the demand is global. But then in the downward camp, there are the 2 huts. At level 3, we've got both Lower Hutt and Upper Hutt. Now, in Lower Hutt, they've actually had it harder. Property values there are down 30% from the peak, the biggest drop in any major city in New Zealand. Upper Hutt next door, it's down 26% from the peak, and it's still falling. Now, the reason? Cotality's Calvin Davidson summed it up. Wellington's still got that public sector malaise going on. The mood's perhaps a bit downbeat. Now, imagine you had $800,000 to invest in November 2021, right at the top of the market. Now, in scenario A, you bought a property in Queenstown. And today, that $800,000 property could be worth $906,000. You're up roughly $106K, again, assuming it followed the market perfectly. In scenario B, you've got the same $800,000, and in the same week, instead, you decide to buy in Lower Hutt. Today, that property would be worth around $560,000. You're down $240K. It's the same country, the same 5-year window, but it's a swing of $346,000 between the two. Now, to be fair, the Queenstown buyer probably bought a smaller property because Queenstown's more expensive per square metre. The Lower Hutt buyer probably got more house for their money at the time, but on pure capital growth, the difference between the best and the worst major markets right now is so big that it's enough to purchase a whole house in a small town. Now we're getting down to the last 2 levels. House prices are skyrocketing in Invercargill and Southland. Property prices are up 21% from the bottom in our southernmost city. That's nearly 10% above its COVID peak. Southland District, which surrounds Invercargill City, that's up 17% from the bottom and is 12% above the previous peak. In fact, all 3 Southland districts, Invercargill, Gore, Southland, they are quietly running away from the rest of the country. Now, why are they booming? It's one word: It's farming. The dairy sector exploded over the last few years with rural land sales up 38% year on year. Fonterra payouts, they've been at record levels for multiple years in a row. And when farmers have money, the towns around the farms have money. And the towns around the farms have property markets that tend to go up. But it's not like the whole agriculture sector is doing really, really well, because also at level 2, with property prices still going down, are Napier and Hastings. Property values in Hastings are down 18% from the peak, and they're still falling. They're down 2% over the last 3 months. Napier next door, it's 19% down from its peak. So we've got two cities, both still going backwards, while in the South Island, it's racing ahead. So even 3 years after Cyclone Gabriel, Hawke's Bay is still bleeding. The recovery bill is around $1 billion for Hastings district alone, and Hastings ratepayers are now paying a Cyclone Gabriel recovery rate that's locked in for the next 16 years. And one thing you've got to keep in mind as you're listening to this is that the takeaway from the video isn't necessarily to go buy a house where property prices are currently booming. I get why that's tempting, because you can see the recovery happening with your own eyes. But if you were investing in shares and you saw a share increase in value, one way to read that is to say, well, that's just going to keep on happening. The other way to read that is that maybe the boom has already been. So if you're watching this, you know that if the value of something has gone up in the past, it doesn't mean that it's going to keep doing that in the future, which is why another way to read this data is to go and invest in regions where property values are currently going down, because that way you might have a better chance at investing at the bottom of the market and being able to buy low. After all, the closer you buy to the bottom of a cycle, the more upside you have on the way back if it recovers. Even if prices are still falling, that could signify an opportunity, not a loss. I mean, I think of it like a shopping at a mall. Buying in a boom is like grabbing something off the new arrivals rack at the front of a store. Sure, it's hot, but you're paying full price, maximum markup. The real bargains are usually on the markdown shelf at the back. They got there because nobody else wanted them at full price, and that's where the wealth can get built. There are two sides to this though, right? If you invest in an area where property prices are dropping, you also don't want to catch a falling knife. But it is worth understanding that the answer to where should I invest isn't always wherever prices went up most last year. Sometimes the smart money is patient enough to buy at the bottom of a falling market, not at the top of a rising one. And look, whether the smart play for you is the boom or the bottom, I mean, it's not something I can answer in a YouTube video. It depends on your situation. That's the kind of thing we help people work through at Opus. And that brings us to level 1, the areas where property values have gone up the most. And at level 1, going up, we've got the west coast of the South Island, Westland District and Grey District. Property values in Westland are up 32% from the bottom, 21% above its COVID peak. Grey District next door, it's similar, up 25%, up about like 15% from the COVID peak. These are tiny markets, less than 25,000 people combined. So the numbers do swing harder than they would in like Auckland, but the direction is unmistakable. The West Coast is the hottest market in the country right now. But why is the West Coast booming? I think there are 3 drivers: mining, agriculture, and tourism. I mean, One News reported in March that the West Coast housing stock is at breaking point amid a mining boom, plus affordability. West Coast median house value is $470K, less than half the Auckland median. And just keep in mind that when property prices are on the cheaper side, a big percentage move might not mean that much in terms of how much money you actually make. Compare that to the area where property prices are falling the most, Wairoa in northern Hawke's Bay. They just hit a fresh bottom in April this year, down 27.5% from the peak. That's not as big of a drop as Lower Hutt, but the difference here is that at least the Hutts seem to have found their floor. Wairoa hasn't. Property values there are down 7.6% in the last 3 months. That's the steepest current drop in the country. It sounds like a falling knife to me. The reason that property prices are still going down is still Cyclone Gabriel. The cyclone hit Wairoa harder than almost anywhere, and the town is still recovering, not bottomed out, still going. But here's the thing that jumped out at me once I lined up all 10 of these. Every single area that's still falling is in the North Island. Auckland, Palmerston North, the Hutt Valley, Hawke's Bay, Wairoa, every one. And almost everywhere that's recovering is in the South Island, Christchurch, Queenstown, Southland, the West Coast. The only place up north bucking the trend is the far north. And if property values in one island are going up and the other is going down, that can average out to a flat market overall. Whether your house is going up or down in value, though, depends on which island you're on. And if you still don't know which side your area is on, the full ranking is down in the description. Find yours in about 30 seconds. So, is the New Zealand property market flat? Well, not really, right? There could be a $350,000 gap between the winners and the losers. And some of the boom areas in this video carry serious risks that I've covered separately. So if you want to know which areas actually to avoid, the 9 most dangerous places to buy in New Zealand right now, watch this one next.